Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong monthly support and demand area. From here, in fact, multiple rejections to the upside have been created. Every time that the market tested its zone, it rejected it to the upside quite aggressively. And as the market is testing once again the exact same zone and has already started rejecting it to the upside, we could expect more potential bullish continuation to be created away from this level. So the monthly time frame at the moment definitely seems quite bullish. We can also notice, if we zoom in into the most recent price action, that this area has been acting as quite strong support as well. And if we look at the pattern that the market has been creating, we can see from here a move lower, rejection to the upside, lower low, equal high, another correction, and then from here the normal completion of such pattern would be a rejection to the upside. Now, why is that? Because if you have a horizontal level of structure, the market first tested its zone, then breaks it to the downside, then breaks back above, then goes for a correction back to the level. At that point, what you would expect is a potential rejection to the upside, essentially for the creation of this inverted head and shoulders, with the left shoulder being here, the head being here, and the right shoulder being here. So from a monthly standpoint, everything seems quite bullish, both from a structure perspective and also from a pattern perspective. Now, let's drop down on the weekly time frame and see what we have. Now, here on the weekly, we can notice how the market has just created a fake breakout from a quite important level. In fact, we can notice how this level was acting as previous resistance here, turned support here, and again here. The market broke below the level and then broke back above. Now, similarly to what we have when we have an inverted head and shoulders, when the market is respecting a level as support and then breaks below it and then back above, at that point, what you would expect is a retest of the level and then a rejection to the upside. That is what usually the market does and how this kind of movement plays out. So in a situation like this, what you would naturally expect is first a test of this zone and then a rejection to the upside away from this level. So both the monthly and weekly time frames both seem quite bullish. And we can also notice that in this case, since we have an impulse and now the start of a correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.32 Fibonacci retracements lining up exactly with this horizontal level of support. Now, what this creates is confluence of support inside of this level. So if the market will now go and test this zone, at that point, we could expect a potential rejection to the upside away from this level, fueled by institutional longing. Now, why do I say fueled by institutional longing? Because when you have multiple layers of support lining up in the same area of price, there is an increased probabilities of seeing institutions adding longs. Now, before we dig deeper into what we have from a technical perspective by going down on the daily time frame, first, let's go and see what institutions are doing, in fact, at the moment on EURUSD by looking at the commitment of traders. Now, the first thing we have to keep in mind is that if we are looking at the data on the euro, actually already we're looking at EURUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been increased quite a bit. We went from having minus 9.9k net positions, so a negative net positioning, meaning that we had more shorts than longs from an institutional perspective, with in fact 177.2k shorts compared to only 167.2k longs, all the way up to now having a positive net positioning of 17.1k net positions with the complete opposite situation. So more longs than shorts, with 178.3k longs compared to only 161.2k shorts. So institutions have been longing EURUSD quite aggressively, therefore making it stronger. So if the market will now go and reach that level again, we could expect to see even more institutional longing of EURUSD, making it even stronger, therefore increasing the probabilities of a potential rejection to the upside. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. So here on the daily time frame, what can we see? Well, first of all, I did speak about EURUSD quite few times in the past. I spoke about it just a few days ago. After this impulse to the upside, I explained all the reasons for which we could expect first this correction and then this rejection to the upside, which is in fact exactly what the market did. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. But at the moment, what do we have? Well, from a daily perspective, we can notice that in creating this move to the downside, the market has also been printing this M pattern. And in general, after the creation of an M pattern, what you would expect is a rejection to the upside for the completion of the pattern itself. So in a situation like this, where institutions are already longing, all this area is confluence of support, and we have an M pattern on the daily, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential push higher away from this level. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.